If your heart stopped beating right now, exactly how long would your bank account keep living? Not your savings, your income. For 99% of business owners, the answer is terrifying. 3 months? Maybe 6? We tell ourselves a very seductive lie. We call ourselves founders. We put CEO in our bios. We talk about building empires. But if you have to answer an email for a transaction to clear, you don't own a business, you own a job. And it's the worst kind of job because your boss is a maniac who doesn't pay for overtime. You. There's a specific, brutal mechanism in finance that separates the wealthy from the merely busy. It's the difference between a golden leash and a golden goose. Today, we aren't talking about passive income. That's a marketing term used to sell courses to desperate people. We are talking about asset detachment, the mathematical process of turning a chaotic, personality-driven hustle into a machine that prints money while you sleep or while you're dead. But to get there, you have to do something that feels completely counterintuitive. You have to fire yourself, and most of you won't survive the attempt. Let's look at the trap. Imagine a guy named Alex. Alex runs a marketing agency. He's brilliant. Clients love him. He makes $300,000 a year. He feels rich. But Alex is the bottleneck. Every proposal goes through him. Every crisis lands on his desk. He thinks this makes him valuable. In reality, this makes his business worthless. Here is the economic reality. In the world of mergers and acquisitions, businesses are valued based on a multiple of their profit. If Alex tries to sell his agency today, a buyer looks at the books. They see $300K in profit. But then they look at the operations. They see that if Alex leaves, the clients leave. The revenue evaporates. To a buyer, Alex isn't an asset. He's a liability, a risk. So the business is valued at maybe 1x profit. He gets $300,000 and walks away. After taxes, that's barely a safety net. Now compare that to Sarah. Sarah runs the exact same agency. Same revenue, same profit. But Sarah hasn't spoken to a client in 2 years. She has a system, a playbook, a management layer. If Sarah gets hit by a bus, the business doesn't notice. In fact, it might even have its best quarter yet. Because the business is an independent entity, a buyer will pay a multiple of 5x, 8x, or even 10x that profit. Sarah sells the exact same financial sheet as Alex, but she walks away with $3 million instead of $300,000. This is the arbitrage of detachment. By removing your ego, you multiply your net worth by a factor of 10. So how do you actually build the machine? It starts with a concept called the SOP feedback loop. But let's call it what it really is: extracting your brain. Most founders operate on instinct. They just know how to handle a difficult client or price a complex job. That instinct is the enemy. You cannot scale intuition. You can only scale process. The first step is painful. It requires you to document every single action you take. Not just send invoice, but the psychology behind it. How do you phrase the email? When do you send it? What do you do if they don't pay? You have to write the manual for a human robot to replace you. This is where the irony kicks in. To build a business that allows you to do nothing, you initially have to work harder than you ever have before. You have to do the work and then document the work. You're essentially digging your own grave at the company so someone else can step into it. Once the documentation exists, you enter the valley of death. This is the phase that kills most attempts at freedom. You hire someone to follow your process, and here is the guarantee: they will be worse at it than you. They will do the job at 70% of your efficiency. They will make mistakes you wouldn't make. They will upset a client you would have charmed. The emotional reaction is to jump back in, to say, "Move over, I'll do it myself." It's faster, it's safer, it soothes your ego. But every time you jump back in to save the situation, you reset the clock. You are training your team that they don't need to solve problems because daddy's coming to fix it. You have to let the fires burn. This is the hardest part of the equation.
You have to be willing to lose money in the short term to build the asset in the long term. You have to watch a deal fall through because your sales guy fumbled it and sit on your hands. Why? Because the cost of that lost deal is the tuition you pay for your freedom. If you can survive the valley of death, the math starts to change. The 70% employee gets better. They hit 80%, then 90%, and then something strange happens. They hit 110%. Because they aren't distracted by payroll or taxes or strategy like you were. They are focused on that one thing. Suddenly, the machine is better without you than it was with you. Now, let's talk about the hype versus the reality. YouTube is full of 22-year-olds and rented Lamborghinis telling you that automation is easy. They sell the dream of the 4-hour workweek.
Here is the truth. A business that runs without you is not a business you ignore. It is a business you govern. You move from being the quarterback to being the coach. Then you move from coach to owner of the team. The owner doesn't call the plays. The owner looks at the scoreboard. This requires a shift in how you view data. When you're in the trenches, you operate on feelings. We feel busy. Cash flow feels tight. When you step out, you need a dashboard. You need 3 to 5 numbers that tell you if the machine is healthy. CAC, customer acquisition cost, LTV, lifetime value, churn, net promoter score. If those dials are green, you do nothing. You go play golf. You write a book. You stare at a wall. If a dial turns red, you don't jump in and fix the engine. You call the mechanic, your manager, and ask, why is this red? You lead by interrogation, not by action. But there is a dark side to this transition that nobody mentions. The identity crisis. For years, your self-worth has been tied to your exhaustion. If you aren't stressed, you feel like you aren't working. When you finally succeed in building a self-sustaining company, you will face a profound boredom. You will wake up on a Tuesday with nothing urgent to do. And your brain, addicted to the cortisol of the hustle, will panic. It will try to sabotage the business just to feel useful again. You'll invent new products you don't need. You'll meddle in departments that are running fine. This is founder's syndrome. It is the tendency of the creator to suffocate the creation. The final stage of this financial system is true sovereignty. When your business can run for a year without you, it becomes a liquid asset. It becomes something you can borrow against, sell, or pass down. It stops being income and starts being wealth. Income is taxed at the highest rates. Wealth is taxed at the lowest. Income stops when you stop. Wealth compounds when you stop. But getting there requires you to accept a brutal truth about yourself. You are not as important as you think you are. And if you want to be rich, you shouldn't be. The market doesn't pay for effort. It pays for systems. It pays for outcomes that are reliable, repeatable, and independent of a specific human being's mood or energy levels. So look at your calendar for next week. Look at the meetings, the calls, the obligations. Ask yourself, are you building a machine, or are you just greasing the gears of your own cage? If you vanished tomorrow, would your business be a legacy, or would it simply be a missing persons report?